Scene: a quiet, timeless library. Ethan appears slightly agitated, while Clara sits with a calm, unwavering presence. Clara, thank you for joining me again. I've been thinking a lot about what we discussed, how our mindset shapes our wealth. But when I'm actually in the market, watching those numbers go up and down, it's a different story. My emotions take over. It feels like I'm fighting an invisible enemy.
Ethan, you've pinpointed the very core of the challenge. The external market is merely a screen. The real battle, the one that truly determines your financial destiny, is fought within. That invisible enemy you feel has a name, actually. Two names, greed and fear. They are the ancient, primal forces that share the cockpit of every investor's mind.
Greed and fear. They sound so dramatic. Are they really that powerful?
They are the market's very heartbeat, the twin engines of its booms and busts. Let's give them a proper introduction. Greed isn't just wanting more. It's an irrational craving for instant gratification, amplified by the crowd. Its signature whisper is, "This time is different." It unfolds in stages. It starts with envy. Seeing others make what looks like easy money creates a fear of missing out. It grows with justification. I can do this too. We tell ourselves, I'll just get in and out quickly. It peaks with certification. As prices soar, initial doubts are replaced by a new era narrative. Any voice of caution seems foolish. This is when leverage is often added, magnifying the stakes. It ends in ruin. When the bubble pops, greed instantly morphs into panic, but it's too late. Think of the Dutch tulip mania, a single tulip bulb traded for the price of a grand house. People weren't buying a flower, they were buying into a story. Believing a greater fool would always appear. Greed makes intelligent people act like fools.
And fear is just the opposite, right? Being too scared to invest?
It's more profound than that. Fear is an overpowering, visceral reaction to loss, a desire to escape at any cost. Its core belief is, the world is ending. Its pattern is a mirror of greed. It begins with a dip. A normal market correction creates unease. It's amplified by narrative. The media fuels stories of economic collapse and systemic failure, which seems to confirm the paper losses in your account. It spirals with the herd. Everyone is selling becomes a powerful social proof. Individual reason melts in the heat of collective panic. It crystallizes mistake. In utter despair, sell investors quality assets at fire sale prices, turning paper losses into permanent 1s, just for the psychological relief of certainty. Recall 2008. At the depths of the crisis, people were panic selling everything, even robust blue-chip companies. Yet, Warren Buffett was famously buying Americans, those who were greedy. When others were fearful, were rewarded immensely. Fear makes rational people abandon all hope. Right at the dawn of opportunity.
So they just take turns? Greed in good times, fear in bad times?
Precisely. They are two sides of the same coin, locked in an eternal dance. As the great investor Sir John Templeton observed, bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Bear markets begin in euphoria and end in pessimism. This cycle is a human nature cycle. Your job isn't to predict it, but to ensure you aren't consumed by it.
Okay, I feel them. But in the heat of the moment, how can I recognize when these inner voices are talking to me?
Excellent. Awareness is your first line of defense. Learn to recognize their language. When greed is whispering, you might hear, "The old rules don't apply anymore. It's a new paradigm. If I miss this one, I'll regret it forever. Why? It's already up so much. Just a little longer. It can go higher. My neighbor doubled his money, and he knows nothing. Not me. A little leverage won't hurt. I'll make a killing and get out." When fear is screaming, the internal monologue sounds like, "This is the big one. Cash is king. Get out of everything. It's going to fall further. If I sell now, I can save what's left. Everyone is losing money. How could I be the exception? I never should have bought this. I'm a terrible investor. If it just bounces back a little, I'll sell and never touch stocks again. Ethan, I want you to write these down. When these thoughts arise, treat them as a code red alert. Your emotions are hijacking your rational brain.
This is incredibly helpful, but knowing the enemy isn't enough. I need a battle plan. What are my weapons?
Indeed, knowing is half the battle. The other half is building your defenses and strategies. You need a system. One. Forge your investment philosophy, your anchor. A ship without a rudder is lost in a storm. Your philosophy is your rudder. It's a coherent set of principles on how you will navigate markets. The principle of intrinsic value. Believe that price eventually returns to value. Your job is to be a business owner, not a stock trader. The parable of Mr. Market. Imagine the market as a man-depressive business partner who offers to buy you out or sell you his shares every day at wildly different prices. You are free to ignore him or take advantage of his moods, but you must never let his mood swings dictate your actions. The circle of competence. Operate only within the boundaries of what you genuinely understand. This keeps you safe from most pitfalls. A firmly held investment philosophy provides the serenity to remain calm when the world is questioning your decisions. To enforce unbreakable discipline, your automated firewall. Discipline is what you rely on when willpower fails. Asset allocation and position sizing. Predefine rules. No single investment can exceed X% of your portfolio. This protects your survival. Margin of safety. Never overpay. Buy only when the price is significantly below your calculated intrinsic value. This is your buffer for error. The pre-mortem. Before you buy, write down your investment thesis. Why are you buying? What is its value? Under what specific conditions will you sell? When doubt creeps in, revisit this document, not the ticker tape. Discipline is using a rigid process to combat a flexible human weakness.
This is about building structure, a system to protect me from myself.
Exactly. And the highest level of this practice is the cultivation of your inner self, evolving from an investor to a practitioner. 3. Cultivate inner mastery, the path of the practitioner. Develop second-level thinking. First-level thinking is simple. It's a good company. I'll buy it. Second-level thinking is deeper. It's a great company. But everyone thinks it's a great company, so it's probably overpriced and overloved. What is already reflected in the price? It's more complex, but it reveals what others miss. Embrace uncertainty. Accept that the future is unknowable, based on decisions on probabilities, not certainties. Seek strategies with a positive expected value over the long run. This allows you to accept losses gracefully, as they are part of the game. Practice contrarian thinking. Be fearful when others are greedy, and greedy when others are fearful. This requires immense courage, but offers immense rewards. Cultivating presence and patience. Great wealth is built from a few key decisions over a long time. Most of the market's time is noise. You need the patience of a hunter, waiting motionless for the right opportunity, then acting decisively.
So in a raging bull market, when everyone is euphoric, what should I do? And in a brutal bear market, when despair is everywhere?
Let's get practical. When the market is euphoric, greed in charge. Point 1. Step away. Reduce how often you check prices. Stop reading the euphoric headlines. 2. Systematically take profits. Don't try to sell at the top. For assets that have become wildly overvalued, create a plan to sell portions of your position gradually. 3. Increase cash. Holding cash isn't a sin. It gives you options and peace of mind for the future. 3. Focus on the business, not the quote. Ignore the stock price. Read the company's quarterly reports. Is its product still strong? Its competitive advantage intact? 4. Revisit your premortem. Remember why you bought. Does that reason still hold?
This changes everything. It's not about predicting the storm, but about learning to sail in all weather.
You've grasped it perfectly, Ethan. This inner cultivation is a lifelong journey. There is no final destination, only daily progress towards being more rational, more composed, and the ultimate reward transcends money. You will find that you begin to handle life's bull and bear markets with the same equanimity. You'll stay humble in prosperity and resilient in adversity. The highest dividend this practice pays is not in your brokerage account, but in the person you become. You become someone who is emotionally stable, logically clear, courageous in conviction, and profoundly patient. This inner strength and peace is the most valuable, the most lasting wealth the markets can ever give you. When you can hear the steady beat of your own reasoning above the cacophony of greed and fear, you will have truly become the master of your investments, and more importantly, of yourself.
Thank you, Clara. This isn't just about investing anymore. It's a blueprint for a more grounded life.
It always was, Ethan. Until next time.